So tonight we're going to look at, we had some requests from members and weekly session attendees. What is this? There we go. With questions about Heikin Ashi. And, I often get asked if I use these types of charts, and I do in certain circumstances or for certain strategies. And, I don't use them exclusively. I still use regular candle charts as well. But we'll talk about what they are and where I think they can be useful. And most charting platforms offer this functionality. And in Zillion, you can actually use a Heikin Ashi chart. So if you just click on from the dashboard, you click on the candles here just to the right of the ticker box. At the very bottom, you see Heikin Ashi. And I'll kind of go over what they are if you're not familiar with them. Let's go back over to, let's go to the S&P 500. So there's a couple things to be aware of. Basically, what they're useful for is identifying trend. So the formula for calculating the candle is different than a regular open, high, low, close candle. But you can see that they can be helpful for identifying trend. So when the formula for the candles is in an uptrend, you're going to see the candles generally print, if you have them set for green or red, they're going to be green. Downtrend, they're going to be red. If you're using black or white candles, generally the uptrend is going to be a hollow candle. The downtrend is going to be a solid candle. So the visualization might be a bit different depending on chart settings, but what it's really doing is kind of showing us using colors where the trend direction is, where the trend momentum is, whether to the upside or the downside. So it's really just going to be basically two color options. Now, for Heikin Ashi, let's talk a little bit about how they're calculated and what to watch out for, because there are some differences between Heikin Ashi candles and your regular open, high, low, close candles. So the benefit is they do give us a smoother look to the chart, so they can help kind of weed out some of the choppiness, right? And the tendency is, again, you'll see during a downtrend red Heikin Ashi candles, and during an uptrend you'll see green Heikin Ashi candles. Now, what you'll notice here is, actually, this is actually not a good example. I'll show you on some other charts. But the current price, if you're looking at like a live Heikin Ashi chart while the market's open, the price that's showing on the chart, the current price level, is generally not going to match the actual real price of the asset. So that's something to be careful about. And that's because they use a different formula, right? So the high and the low are generally going to be the accurate high and low, but the open and the close are likely not going to show the true accurate nature of the candle. So like if you look at all these green candles, it looks like, wow, these are all this is again a daily chart. Every day, almost, with the exception of a few in here, the S&P closed higher, but not the case. If we switch back over to regular candles, you'll see that there was actually plenty of lower closes during this uptrend. So again, it's just smoothing out, making it easier to read, but that can still be beneficial. And it's kind of, it's an interesting exercise to just keep toggling back and forth, look at different charts, toggle back and forth between a candle chart and a Heikin Ashi. You can see that if you ignore the color, the chart really, didn't change overall. If you look at like the highs and lows, right? All it did was really change the colors. So the opens and the closes are what's going to really be impacted by the Heikin Ashi, all right, chart. So that's what you want to be mindful of. So it can help us, though, identify trend direction. So I don't like to use Heikin Ashi charts by themselves as a sole means of decision-making for a strategy, because you can get tricked and whipsawed. Like here's an example, we're big sell-off here. Now, most of these Heikin Ashi candles are red, but in between we've got periodically some green bullish candles, right? Well, that's where other tools and methodologies become important for avoiding the false candles. So let's talk about some ways that we can do that. One of those is trade trend. So what I really like to do is use trade trend with Heikin Ashi. And so I'm looking for basically a significant shift from green to red, or vice versa, red to green. But I'm looking for a sustained bullish in the case of a sell signal, and why I like this particular one here on June 9th. Sustained bullish uptrend from Heikin Ashi. So we've got a significant series of green bullish Heikin Ashi candles and a significant uptrend. All right. Now, we did get a bit of an indecision candle, but it was Heikin Ashi red. Okay, I don't want to take this one. Here, we get a wider open close. Again, remember, that's not going to necessarily match the true price of the asset, in this case, the S&P. Okay, after the significant move. So I'm paying attention to this now. And I got a sell, pending sell from trade trend. Okay, so this signal I like, right? And turned out to be a very nice Heikin Ashi move to the downside and a trade trend, successful trade trend short setup. Same with this one, very sustained big move to the upside in green Heikin Ashi candles. Sell signal. This one came in on a green Heikin Ashi. You'll notice these two are indecision candles. So you can see they're kind of doji style candles. Okay, so I want to pay attention. I don't want to get in until I see a red Heikin Ashi. There it is, August 19th, and a confirmed triggered entry from trade trend. So this is another nice one. This one I would have been cautious about, although it did result in a rotation higher on this buy signal, and it was a significant sell-off, followed by a transition to green candles and a doji indecision on the buy, pending buy. It was counter trend. So the other thing I pay attention to is I also use the Bollinger Bands. So I want to look for if we're going to take a counter trend signal like this, I'm only expecting a brief, maybe 2-3 candles at best, counter trend trade with not a lot of potential for sustained run. So obviously there was significant dynamic resistance here from the mean reversion, and then a continuation of the sell-off. So this one I really like. Right, here's a sell signal that aligns with the Bollinger Band trend. It's got the shift from bullish to bearish Heikin Ashi. It's got the sell signal, and it's also in a red divergence cloud. So that's the other factor that I'll use for confirmation. So if I see upward, so here's a good one. I see upward sloping, right? We had 4 bearish Heikin Ashis. We have a green divergence cloud. We have a transition from down to upward sloping Bollinger Bands, our mean band and our outer standard deviation bands. We have a trade trend buy signal. All 4 factors are lining up. And this one turned out very nicely. Same thing with this one, right? The sell, right? So we have downward sloping volatility bands and standard average. We have red divergence cloud. We have sell signal. We have transition. There was one up here too, but there was a number of good ones along the way. Transition from sustained green bullish Heikin Ashi to sustained red Heikin Ashi. right? So those are kind of the things I'm looking for. So like today, or yesterday on the S&P, there was a sell signal. But look, and this is again why we're looking at these key levels like 3,900. So it started out, the signal's in profitable territory currently at the close today. But what is it? It's counter trend. I don't want to put on a short position with the expectation this thing's going to be one of these moves, because it's in a green divergence cloud where we're trading against the upward momentum. Our average center band and our standard deviation bands are upward sloping, and standard deviation bands are converging, which means volatility is contracting. Again, green divergence cloud. So all four factors do not line up on this signal. So if I take a counter trend, I treat it as a retracement or a brief mean reversion without, the expectation that it's going to be a big runner, right? So that's how I'm analyzing this to make appropriate decisions for my strategy and trade management. So kind of to sum up, they can be very useful for timing entries, especially when I find when I use them with trade trend. So again, looking for the trade trend pending signal and or trigger to be on a red Heikin Ashi candle for a short setup, or on a green Heikin Ashi candle for a long setup. And then using my levels, whether it's a static horizontal level or a dynamic average or standard deviation band. But I want, and then looking for that divergence, right? So my higher probability setups are going to be sell signals with those factors in a red divergence cloud, and buy signals with all those factors in a green divergence cloud. And so again, I'm looking for, with Heikin Ashi, I'm looking for the confluence of these four factors to really give me the higher probability opportunities. And I think then, Heikin Ashi could be a valuable tool for confirmation and helping us stay on the right side of the market move. Just like anything else, they're not foolproof. It's not a guarantee, and when used alone is probably not going to give you a significant long-term edge. But using 3 or 4 factors that all line up can really give you a significant long-term edge, and also help weed out if you're looking for instance, a more sustained move that aligns with your strategy. Like if you're maybe structuring an option strategy or building an options trade based on expiration and volatility and all these variables that would need some time to play out, you want to take that into consideration when looking at these metrics, because if you take a counter trend trade, in this case, the example we looked at on September 7th, where we did get a nice retracement and what would have been a nice retracement trade over the course of a few days, there were all the factors weren't lining up, right? So we know that at least that we're taking a counter trend trade in a red divergence cloud against volatility and mean momentum, which is to the downside, and that we shouldn't expect this to be a real sustained move. Maybe it will be, but I don't want to, put my eggs in that basket, when I'm building my trade around that. So I want to build it around what the expectation is. And so that's really what can help us do is, if we see these factors align, then we can set the expectation to build our strategy and then also manage our trade. So, all right, so we can look at some more Heikin Ashi charts, and maybe we'll do that tonight for Ticker Roundtable, but want to pause there and see if there are any questions before we transition over to Ticker Roundtable.
Let's see here. Yeah, some people are kind of looking through it. Yeah, a lot of people just find this really fascinating, how this works, and then showing trade trend lined up with it.
Yeah, I think they're great. They're great complements to each other. And for me, again, like I really use them not, partly for building my strategy and managing the open trades, but also kind of helping me weed out signals if the factors don't align. And I think it could really help people with that if you're a trade trend user, a Zillion user, rather than just blindly taking a signal. You want to really look for this confluence. I think it could really help increase your win frequency, your accuracy, as well as set the expectation for your trade as you manage it. And so hopefully you guys got out a lot out of that tonight. We'll use it more moving forward, and we'll even look at using it in the future with building trades around it. For now, I just wanted to look at the mechanics of it, the rationale for using it, some of the other variables that we want to incorporate for our decision making. And then so down the road, we'll look at using Heikin Ashi and trade trend and some of our other tools like Divergence Cloud and Bollinger Bands to actually build some example trades around with options and other things. So, all right, guys. Well, we ran a little over tonight, but I hope you guys come back again next week. We'll be back next Tuesday, same time, same place. Are there any final questions, Richard, before we wrap it up for tonight?
No, Lala was just saying that CTSH is a tech support company providing services outsourcing mainly to India, like INFY.
Oh, okay.
There you go.
Good to know. I will do a little research on that one. Well, those
That's all I got. Everyone says thanks a lot. Great session.
Thanks, guys. Appreciate that. Well, I hope you guys have a great rest of the week. Again, really watch that 3,900 level tomorrow on the S&P. That's going to give us a lot of indication in terms of bullish or bearish sentiment moving into I think the rest of the year. So let's keep a close eye on that. It might remain in play beyond just tomorrow, but let's really pay close attention to how the S&P reacts around that 3,900 level. And then we'll follow up with that when we see you guys next Tuesday. So have a great rest of the week and looking forward to seeing you guys next week.